Good morning. This is Larry Edelson for my Uncommon Wisdom weekly market video update for Thursday, May 5th. Well, this week certainly got off to an interesting start with the Bin Laden news late Sunday evening, and thank God he has finally been eliminated from the global terror scene. I don't believe that this represents the end of terrorism. There will be another chapter in it. It's uncertain how it will unfold, but thank God again and bravo to the United States for eliminating Osama bin Laden. Now, the markets, the reactions we're seeing, many will attribute it, of course, to the news Sunday night about bin Laden, and I'm sure the volatility, at least, is attributable to the news. And perhaps the trigger for a correction that I've been very wary about and suspecting all along, at least in silver. Having said that, the long-term trends in all of these markets, from the precious metals to the stock markets to the dollar, incredible weakness in the dollar, remains unchanged. Those long-term trends remain intact. In fact, one might suspect that after the news was released on Sunday, we'd see, a pretty powerful rally in the U.S. dollar. But nothing of the sort has developed. Not even barely a blip occurred in the value of the dollar. Barely a bounce Sunday night and Monday early trading. The dollar, in fact, let's go to that chart first. The dollar remains severely under pressure. As you can see from this chart, again, this is the intermediate term trend chart that I've kept up here for you and I'm monitoring all along. We remain below this pink line, and the dollar remains in danger of an all-out crash here down to the 68 level and perhaps even lower. On the other hand, if it can manage to find a slight climb above the 73 level, 73.70 level, then the dollar might meander sideways and hold its own for the next few weeks. But make no mistake about it, the long-term trend in the dollar remains down. It will remain down at least into 2012, possibly extending into 2015, 2016. And as you know from my work, I have 100% confidence in my longer term forecast that the dollar is going to lose its world reserve status, and we're going to have a new monetary system down the road. That's still probably 3 years off, but it's going to happen. And that is one of the long-term forces driving precious metals substantially higher. Right now, however, let's go next to the silver chart. Silver, I've been warning all along, is one heck of a dangerous animal. And we started to see a break in silver last Friday. Then as the bin Laden news hit late Sunday evening, in Asian trade, we saw silver really get clobbered. So far from its $50 high, we have silver down almost 20%, just under 20%, call it 18%. We're down about $9 an ounce in a very short 5-day trading span since last Friday. Now, silver will probably test the 37 to 38 level. I put out a flash alert to my subscribers on Monday regarding the market developments and the bin Laden news, and I believe that silver will press down to the 37 to 38 level, where I will get aggressive in silver bullion and in mining shares in silver miners. So far, I've only put on a very, very small position in one silver miner for my subscribers, and I did that just as a safekeeping kind of long-term core position. I did not want to get aggressive in silver or silver miners until I saw some of the bullish euphoria wrung out of that market, and we're starting to see that happen now. So keep your eyes on silver. It should move down to the $37 level in the coming few trading sessions. I want to go now over to gold. Gold is holding much, much better than silver. We have pulled back a little bit in gold. We're back down to the 1535 level after touching just above 15. What was I? The high came in at 1577 on the June futures, but 1575 on spot gold. right near this forecasted resistance line, cyclical resistance line I've been pointing out for you. Gold could now dip below $1,500. But again, that would just be a test of support. Gold is out of the woods right now. Any dip down to the 15 and a quarter level even, or to 15 or just below 1500 should be considered a wonderful buying opportunity for the next leg up. Now, let's move on to the Dow Industrials. The Dow Industrials are holding some very good strength. Of course, we've seen some very good positive earnings. The strength in the Dow is largely attributable, on the one hand, to earnings, but primarily attributable to the weakness in the U.S. dollar. The Dow Industrials, the S&P 500, and even the bluest of the, let's say, the tech stocks that aren't in the S&P 500 or the Dow will take on monetary aspects. That is, they're being monetized by the weakness in the U.S. dollar. That is my long-term forecast. I'm one of the only ones I know of that has forecasted that starting way back during the crash of 2008. I said as Bernanke and the Fed floods the world with dollars and starts monetizing assets left and right and devaluing the U.S. dollar, stocks will start to inflate just like commodities at some point. And we're already starting to see that. We're not even in the rip-roaring stage of that yet for stocks. That will come later. But right now, the Dow Industrials are still in a position to test the 13,000 level, the psychologically round number important 13,000 level, and perhaps even up to 13.6. So for now, please stay tuned to these markets and to any of my publications. And as always, have a great weekend. This is Larry.